Hi, I'm Ed Sakota. In response to numerous requests over the years to reveal the inner workings of my trend trading system, I hereby take great pleasure in presenting its essential elements for your financial edification. Joining me today are several members from the Northern Nevada Bluegrass Association. We gather to play benefits for local area hospitals. If you are currently in a clinic as a recovering marketaholic, or even if you have a mild case of marketitis, this tune might put you on the road to recovery. In any event, pull up a chair, lean into your monitor, and lend us an ear. We hope that you enjoy the show. You get a whipping, I get a saw, honey. You get a whipping, I get a saw, baby. You get a whipping, I get a saw. One good trend pays for 'em all, honey trader, baby mine. Now what do we do when we catch a trend, honey? What do we do when we catch a trend, baby? Well, what do we do when we catch a trend? We ride that trend right to the end, honey trader, baby mine. So you get a whipping, I get a saw, honey. You get a whipping, I get a saw, baby. You get a whipping, I get a saw. One good trend pays for 'em all, honey trader, baby mine.
Well, what do we do when we show a loss, honey? What do we do when we show a loss, babe? What do we do when we show a loss? We give that daggone loss a toss, honey, baby mine.
Well, you get a whipping, I get a saw, honey. You get a whipping, I get a saw, baby. You get a whipping, I get a saw. One good trend pays for 'em all, honey trader, baby mine.
We make a lot of money and we sleep at night, honey, baby mine. So
you get a whipping, I'll get a saw, honey. You get a whipping, I'll get a saw, baby. You get a whipping, I'll get a saw. One good trend pays for 'em all, honey trader, baby mine.
Well, what do we do when the price breaks through, honey? What do we do when the price breaks through, baby? What do we do when the price breaks through? Our sauce or Renzo's nothing to do, honey, baby mine.
So you get a whipping, I'll get a saw, honey. You get a whipping, I'll get a saw, baby. You get a whipping, I'll get a saw. One good trend pays for 'em all, honey trader, baby mine.
What do you do when the drawdown comes, honey? What do you do when it gets real big, babe? What do you do when it's even bigger? We stick to the plan and pull the trigger, honey trader, baby mine. Well, you get a whipping, I get a saw, honey. You get a whipping, I get a saw, baby. You get a whipping, I get a saw. One good trend pays for 'em all, honey trader, baby mine.
What do we do with a hot news flash, honey? What do we do with a hot news flash, babe? What do we do with a hot news flash? We stash that flash right in the trash, honey trader, baby mine. So you get a whip and I'll get a saw, honey. You get a whip and I'll get a saw, baby. You get a whip and I'll get a saw. One good trend pays for them all, honey trader, baby mine. Good trend pays for them all, honey trader, baby mine.
Yeah, good evening all. I've just ran the credits there to give them the credit for their wonderful song, the Whipsaw song. Welcome to everyone in the chat now. This is meant to be a members only chat, but it's gone wrong. And I quickly switched it to public so that people got the link. There was a problem with getting the link. I have a problem with the private group and the YouTube link and them not being, they don't talk to each other. So, and my tech person is not around, so I've been doing it myself. But welcome to everyone. It's great to see you here. Now, there's a couple of questions about natural gas already, and I think we can start with that. But let's just read through a couple of the notes that I got on the page. And while you're here, good to see you in the middle of the week as well, Vishesh, and everyone else. Natural gas about to explode, maybe. I hope so. Let me know if you can hear me well. And I'm just going to read through a few things here the first couple of minutes, and then we'll go straight into the charts. It's not going to be a long session today because I'm still away from my office, and all my equipment is not all that. I don't have all my stuff with me. I've got one computer. But I want to read through some of the stuff. Now, this is the NatGAS weather report. I don't subscribe to this anymore, so I can't get in, but I don't really need to. It kind of gives me what I need to know. We've got light demand at the moment, probably getting a little stronger into the weekend. And there are notes here, which were updated yesterday. The weekend weather data trended colder, with a chilly weather system sweeping across the US, Feb 21 to 24. However, the weather data also trended warmer for March. February 25 to March 1, et cetera, et cetera. So kind of warm at the moment, cooling off a bit maybe towards the weekend. Another note here, much warmer than normal at the moment. Colder exceptions this week will be over the west as chilly weather systems arrive, coming from the west coast and then spreading across the US for the weekend. So maybe a bit of a pickup in demand. And you can see that sort of on this chart over here. That's the first thing we'll talk about is natural gas. While we're on the browser, I want to point out some of the economic data that came in today. Pretty good news from the UK, really, in terms of inflation. All the numbers quite a lot down. If you remember, Britain had the the worst end of the inflation stick in this last couple of years. All countries experienced inflation, but the UK experienced it a lot worse than others. And there's a particularly sensitive topic, cost of living explosion in the UK. I know a little bit about it because I've got friends and relatives. I'm British myself, so I know a bit about the politics and the feeling of the British public. So pretty good news. PPI and inflation all coming down. And then there was some good news from the US too. And if I can just scroll down to where it is, and you'll see that we got good news on housing. Housing starts all pretty strong, above expectations, and also durable goods orders, although slightly negative, a bit better than expected as well. So, things like non-defense spending, durable goods orders, all quite good. And then some of the other ones, these other numbers, not as bad as expected. So overall, quite good. And just to remind you, go and follow me over on X here at ArcisFX on X, so that you get my intraday updates. And you'll see there've been a fair few today. I've talked about the put-call ratio in stocks and how this might be a sign that we're sort of entering into a new rally phase. Also put up some charts on the NASDAQ emphasizing that I'm with the bull flag idea rather than the broken triangle, this pattern over here, and the S&P and all sorts of things, fear and greed index. So go across there, sign up, just follow me on X if you want the intraday stuff that doesn't make it to video. And of course, you're following me on YouTube. And if you're not subscribed on YouTube, you can do so now, and just give this video a like. That would be much appreciated. Now let's go straight into the charts. Can you all hear me? Is everything hearable? Everyone hear me? Just let me know, please, in the chat. I can't see the chat either because unless, can I see it over here? I don't think so. Probably not. There we go. I can see the chat. Yeah, okay, wonderful. It's not coming through. I'll have to get back to the chat. I can see it over here, but it's not coming through on the back end. I will get to it. But let me just now quickly switch to the charts and get straight into those. So I hope you like my Bitcoin background. I made it myself. Actually, the software made it for me. So what we want to do is get the charts up here. I'm getting a little smoother on the StreamYard software too. So there we go, great charts. Now, as I said, let's start with natural gas. And this is looking quite droopy, but there are a couple of things, and I've done quite a lot of videos on natural gas recently. And if you've been following, you know that I'm kind of long. And we were long at all these long tranches down at the bottom here. Got stopped out at break even when we got a bit going and then fell back down, made another gap over the weekend, back down to here. Now we've got another little channel that we formed, quite a neat one now. We've got two crisscrossing channels, the one that we fell out of and the one that, you know, angling up. And then you always normally fall down out of an angled up channel, and we normally rise up out of a falling channel. So we're in a falling channel now. We were in a rising channel. And it's interesting. At the bottom here, this price action is interesting. First, obviously, the first thing we want to talk about is all these gaps. We've got a big weekend gap, another one, and another one. That's a roll gap, actually. There's the weekend gap, number 1, number 2, number 3. We still have not finished filling this gap. We still have not got to that top candle there, and we're still a little bit away still. But look, so we've got those gaps to fill. We've got inclement weather, not inclement, it's sort of dodgy, neither here nor there. Might cool down a bit, it might not. You can see this in the price action. More or less, we've gone nowhere since the 10th, well, beginning of the month, really, not even, well, about the 9th of February. Since this sort of last weekend gap, we've almost gone nowhere for about 10 days, angling slightly downwards, but with no real conviction, and all those gaps left above us. Also notice that in this new channel, we bounced off the channel center line after gapping down, you know, slamming into the channel center line, and we bounced out of it, which is quite good news for the bullish side. And we have not got below that low yet, still. That low down there, maybe we just sort of pipped it. We did by a fraction, but that, and maybe, you know, it's a clear out. We'll have to wait and see. This candle's busy forming. But that low there, that previous swing low, was at 295, and we're trading at 295 now. So we have not yet closed beneath that low. And, you know, maybe we'll hold here. We held the channel center line, and we've still got all these gaps above us to aim for, including a big roll gap on the left-hand side. Now, the comment was, yeah, we've got the roll coming up, the contract roll coming up. We might get stuck at the bottom. Sure, we could do that. And, you know, when we roll over, my position will be taken out, and I'll be left with whatever result I've got, either a profit or a loss. I hope to be out of the trade before then, so I don't have to be forced out of the trade by the rollover. But, you know, I think there's every chance. We've still got a few days left. On Black Bull here, I've got a week left still before the roll is forced upon me, and they will literally just close my position. I'm only about 12 cents out of the money, 15 cents out of the money right now, with a relatively small position. So let's see what happens. But it is looking like we're trying to hold here. And as I said, we've got down to the bottom of this channel once, and we have not managed to get back down to the bottom of the channel again. But we have retested the top of the channel 3 times since then, well, around about this time. So we tested the top, tested the top, bounced off that 20-period moving average. Notice that the 50 period's right here as well, holding us down. It has done all the way, the red line. The 50 has held us there, it held us there, it held us there, and it held us there. So we've got to get through the 50 on the 4-hour. But notice how we've actually hugged the channel top rather than the channel bottom. We haven't even got back down to the channel bottom. That's all kind of bullish behavior. And considering that this weekend, although it's still a few days away, might bring in, some more heating demand days, it could be okay. Let's wait and see. I like the way this pattern's forming. This is the 4-hour chart. And if we zoom into the 1-hour chart, you'll see that we're trying to form, there's a sort of basing pattern going on right here. Not convincing. We did clear out that bottom, which is good, I think. We got rid of some of the liquidity, stop losses below there. And we're now trying to bounce out. So it all looks quite good to me so far. But of course, any moment these candles can suddenly just drastically move one way or the other on natural gas. It's thirsty work being down here in Jeffreys Bay at the beach house. I did a 10-kilometer walk on the beach this morning with Bobby the dog, which I showed you in the last live stream. And Bobby's lying on the floor next to me, absolutely exhausted. He only weighs about 9 kilograms. So 10 kilometers, it's a long walk, 1 kilometer per kilogram. So that's natural gas, and I kind of like it. And we'll see how this 4-hour candle plays out. Now, the other question on this page is oil, WTI, which I'm trading. And it looks like we might be going to war. Now, this weekend, it's normally on the weekends, right? Or after hours, that if there is going to be an attack on Iran, and it looks imminent, who knows what's going to happen next. I think it's going to be a shift show, if and when it does. And if it doesn't happen, it's also terrible because of what's going on in Iran. I don't know what the answers are. But if there is war, that could potentially form a spike in oil. And I don't know. And it depends on the timing. It could be after hours. It could be this coming weekend when the markets are closed. Probably more likely to be that with being related to oil and with Trump being so sensitive about oil prices and inflation and the Fed and interest rates, he won't want to see the oil price going through the roof. So if there is to be an attack on Iran, it will probably be on the weekend, which gives us a few days before this goes ballistic. But it is getting prepared. We're holding that ledge pretty well. And even though I'm short, I'm not liking the way that we're holding this ledge and the 200 period moving average here on the day chart. So if we don't manage to force the way back down today sometime, or maybe tomorrow being Thursday, and considering that if there's going to be a war started, it might be on Friday night, for example. So that would be the day before tomorrow. If we don't get this moving down, I'm expecting that this will spike up on news of war. For those Christians, you'll know the famous Bible verse, war and rumors of war. Well, we're in the rumors of war right now, and the war, it might be coming anytime. And if it does, we might spike up into the channel top over here, into that order block, that swing high, and potentially, although I don't think so, all the way up into the 80s, rather than just into the high 60s or low 70s. So I think really above us within this channel, that zone there, I'll put a big blob there for you, is the area that we should be looking at. And of course, I'm going to get hedged if I have to in the next day or two, depending on how these day candles sort of work out. So I'm going to put a sort of a blob over here. Actually, it's not in the right place, but I'm going to leave it at red. I'm going to make it, well, let's leave it green. So I'm going to put a blob. Let's just grab it and drag it along, like something like that. All right. So that's at the point of control. It's at the channel top, and it's at this order block and that previous swing high. And it's also just around that market structure break level that we have drawn on the chart from prior to that. We might also get the RSI overbought, which it has been prior to this on that last spike up over there. The RSI became overbought, but we've fallen back now, so we're not overbought anymore. So if that is going to happen, that would be the kind of idea. And then to get short at this green blob, maybe we should make it red because, if it's going to be short. So let's make that red. So into that blob there, if we have to, and then down. But if we don't have to, and we start moving down from here, in other words, don't close above this top really that we've got at the moment. If we don't close above there, I might not hedge it and see if we can get this moving down. Maybe even add some more shorts. I don't have a full position on this, and I'd like to add some more if it gets going. I think we can get that back down to $55, and I think we might even be able to try $50, all going well. But a lot will depend on what goes on in this particular conflict and the other conflicts that are going on in other parts like Ukraine. Now, considering conflict, we now have a long position on gold that we took yesterday or the day before. I think it was yesterday. Or was it this morning? I think it was technically yesterday, but this morning my time. So we got long right at the bottom of this candle today, and it's moving up simply because I've taken a short position on silver, thinking that silver is going to follow this path, a chance of it. I'm not saying it will. This is a potential. That's gold. This is a potential path that silver could follow. And I've done a lot of work on presenting this to you on X and on YouTube and in the private group. And I have the feeling that we're possibly going to move lower on silver. We need to move this along one more time, down to about 55 and bounce out of that double top breakout level for us, to set us up for the next leg up to 120, maybe 200. 180 is the next stop, actually. So I think we might have to drop down further on silver for all the reasons that I explained in the last video and on my posts on X. And if we were to do that, that would be great, because I'm hedged on silver. I want to get out of the short side and get long at some point. And on gold, I generally want to be long, and I wasn't sure when to get long. But as silver started moving up, and I have a 5% position on my long, a new short silver position. It's 5%. I have the hedge position, but a new short 5% silver position. I've added and it started moving up, and so I added a 5% long position on gold to hedge the short silver. So it's a 5% on gold, 5% on silver, and I've also got the larger hedge on silver. So anyway, so far so good. We've got I don't know what price we got in at, pretty low, 4890. I think we've got $100 on gold. Believe it or not, that candle doesn't look $100 tall, does it? But it is. Let's go to that's the 1 hour chart on silver. I want to show you. Let's have a look at the 1 hour chart here on gold, and you can see that is actually 100. There's my arrow. It was down there. That is actually about $100 move, 4,900 to 5,000. Believe it or not, in the space of just like that, just since early this morning. Crazy stuff. So that's it. I'm long on gold now. I'm short on silver, long on gold. So basically a hedge position, and I'm also hedged in a larger silver position, long from higher up and short from higher up as well. A complicated story. We did get short right at the top and took profit at the bottom, but I'm still got a hedge to deal with to unhedge, and I'm going to have to maybe sacrifice some of that profit in the unhedging process, but maybe not. Maybe things will just work out in our favor. We can get down at the bottom, take profit on the shorts, add some longs, and up she goes. So that's the plan on silver. But if we don't move down, I'm prepared to. I've already hedged it with a long on gold, tiny one, and I'm also still long on copper. And I think copper is holding up pretty well. I think copper is going to be the story, one of the good stories. Copper and silver, perhaps not perhaps not so much gold. Although gold will, I think, keep on marching higher, marching higher, being a store of long-term value. But silver and copper could be explosive. They could be even more exponential, even more aggressive in their moves higher, because of the demand for both of them in industry and this whole new AI and crypto economy. So I'm long on copper, long on gold, and short on silver. I know it sounds weird, and every time I do it, it sounds weird. But if you remember, most of the last part of last year, we were constantly long on silver. We got long on silver at $27. We got out at 120. We got left with a bit of a problematic hedge, but we took a lot of profit on silver. And gold, well, I think it's just going to keep sort of, edging up. And that's my plan. So now going across to Bitcoin. And well, I really don't want to talk much about Bitcoin, except to say that we're still stuck in this yellow zone. And until we exit from here, I've got nothing to really add. I've got a long position from about 91,000, fully hedged at 89, 87, and 85. So all of that is stuck at the top. Those are my main positions. And I've got a very small long position, which I've started off in this zone over here. And I'm hoping a long position, and I'm hoping that we'll bounce up. But if we don't, and I'm not expecting that we will, it's kind of a stink bid, if you will. If we don't bounce out, which I don't expect we will, the way it's looking, I will hedge that tiny little bit that we've got here, maybe if we break down through here, and then look for this to reverse somewhere at the bottom or probably below. I'm in the camp that thinks that we might get a slightly lower low down into, let's say, 55, but I'm also allowing for about 45, because at 45, let's go to the weekly chart. It's all I'm going to finish off saying. I do also want to say that this big spike, weekly spike low to the 200 period moving average was pretty convincing. And if you've ever seen a bottom on a chart, this looks very good, very, very good to me, particularly on a weekly scale. However, it's Bitcoin, and it's not being very, it's not behaving well at all. We've got a massive move down, big bear flag, the target for that bear flag, by the way. And I think we've achieved it. And it's kind of interesting. Let's put a path on there, because if we take this bear flag pull from the top down to the bottom there, and just duplicate that from the top of the flag down to the next point. In other words, I've just duplicated, basically, this is a full technical pattern. Move down, bear flag, so A, B, C is equal to A, and that takes us all the way down to $50,000, and that big swing low zone, including that clear out spike down through the bottom over there. It could also take us back down into, keep this RSI, weekly RSI down in the blob. Remembering last time we had a very similar pattern, and the last time we got an oversold RSI on the weekly chart on Bitcoin was in 2022, and it took 6 months, and including a new low in that 6 months before we managed to bounce out. We arrived where we are today in, let's say we got there in January, the bottom of that big spike low. 6 months from then could be July, August this year, before we even start moving up at all. Look at 2022 and imagine to yourself that that same thing could happen. Doesn't look like much there, but when we were there, it was a nightmare. And you may remember that big sell-off. I think that was the SBF, FTX, Sam Bankman-Fried sell-off, which quickly recovered, but it still took, and this is a weekly chart, it took about 3 or 4 months to recover just from the SBF saga. And we're back down there. We've only just arrived, and it may be another 3 or 4 months, unless we have a big, sort of breadth thrust in crypto out of here. Breadth thrust meaning everything just gets a boom. We get a V-shaped recovery, and we get going. But I kind of think that's already been negated and nullified, because that would have been a continuation rather than a flopping down. We would have seen something more like this if we were to see a breadth thrust in crypto. You can go and Google what a breadth thrust is. And I'm talking about it in a loose manner, because when I say breadth thrust, I mean everything moving at the same time, normally applied to the S&P and stocks. Everything moving up and forming this sort of V-shaped recovery. If you remember, I'll show you what it looks like. And we've had this on the NASDAQ, on the S&P, and this is what a breadth thrust looks like. Let's go back. There it is right there. Those were the tariffs breadth thrusts. We saw the same thing on the S&P. Sharp move down, a big strong correction, and then a very quick move up thereafter, and no faffing around thereafter, like we're seeing on Bitcoin. Now, Bitcoin, if it was to be a breadth thrust, would have done something like that, but it has not. Something like that, like we saw on the NASDAQ, on the S&P. But instead, it just flopped down. Doesn't look great, to be honest. If we had seen that, I would have been all in and ready to go, but we did not. And we've done actually exactly the opposite, just flopped down like a worm and crawling along the bottom. Not very good. But anyway, let's see how it goes. I've got a small long position from current levels. I've got a lot more longs higher up, which are fully hedged, locked in, nothing to do about them. Now, NASDAQ and the S&P, I've just moved away from this. We got fresh longs on both of these yesterday and today. I'm very pleased we did that. In fact, this morning, I put fresh longs on the NASDAQ. We have some longs from prior to that. And I'm thinking that we're now going to try and have a look into this next blob. Look at this moving average confluence, 50, 20, 100. The 200's way below us, thankfully. We're holding the 200, which is good. This is the day chart. We don't really want to be below the 200-period moving average. We were with the breadth thrust. And that's another sign of the breadth thrust. Look how it burst up through the 200 and the 100 without even touching them. We actually gapped through them. We have not returned to that gap either, by the way. So we gapped through the problematic moving averages, and that's characteristic of a breadth thrust. We didn't see it on Bitcoin. Now, I think that this is actually a bull flag and not a triangle failure, and that we're going to try and look into this blob, get into that valley of desolation, volume valley over there, and then start to move up. And the moment we close above this double top over here, something like, move above it, and then a retest from the top, I'll try and even add some more longs on there. So let's draw a little path. That green path is my target, this one over here, top Bollinger Band, and target at about 28.5. But so I'm looking for this sort of thing. First of all, to get through that blobby zone, and then through the top. And then on the retrace and successful bounce out of there, that will be where I look to rebuy some more NASDAQ. And maybe even on this little retest here, if we bounce up through there, come back, hold the trend line, which was a triangle bottom, which we failed, so it's not all that strong anymore, but hold it, and then hold this flat top breakout for a move up to about 28,500. That's my plan on the NASDAQ. I have a very similar plan on the S&P. By the way, if the NASDAQ doesn't work out and it falls, I'm expecting that blob to be the next target. So it's either going to carry on moving up, and I'm long. We're in profit on both of our tranches. But if it flops down from that little blob right now, today, and it's heading there now, if it flops around from there, I expect we'll fall down through the bottom, through that double bottom, through the 200 period moving average, and down to about a 15 to 20% correction, right the way down into the next block of volume, all the way down here. So where the breadth thrust actually exited, or I don't know what the word is, where the breadth thrust turned into a new bull rally. In other words, we broke through that top and turned into a new bull rally. We've not retested that high yet again. So if we do fall down, we're going to retest that high in the top of the breadth thrust. And if we don't, and we keep moving up, that's the kind of thing I'm expecting. Same on the S&P. I've got longs on various names. I'm also long on the German 30, by the way. And I've got longs on MSTR, Tesla, Coinbase, NVIDIA. And we saw NVIDIA and Tesla, and another one that I was looking at, which one was it that we have on Palantir that I'm hedged on, but that's looking quite good, gapped up today. Meta looking quite good, dollar perking up even. Circle, Google, I don't have all of these on, but I've got some of them on. I've got Avgo on, that's looking good, and Palantir and Microsoft are hedged. But just going back to this chart where I was talking about the German 30, yeah, long on the German 32, and just a small position. We managed to close the gap, so that's the first job done, but we are at the top 200 period Bollinger Band, and I'm going to be watching very closely to see if we can keep moving up on the German 30. My view overall for 2026, and it's contrarian to what many people think, and all the hype that you'll normally see on YouTube and on X, saying we're doomed, the market's going to collapse, everything's done, it's over, too many cracks appearing in the system. You'll see it all over X, but people, always put the negative stuff up on YouTube and X because it gets them more clicks. I won't do that to you, and I think this market's moving up, not down. Finally, on this next page, I'm long on TLT. This has gone for a change fantastically well. My position is right down here below the 200 period moving average, in the mid 80s, and we're now up into, well, about 90, high 80s. So we've got a good percentage profit on there too. The US 10 years moving down, Bitcoin, gold moving sideways for 3 or 4 weeks, Bitcoin dominance moving down. Okay, folks, that's everything that I really want to just rush through and cover. And I'm going to just see if there's anything that I can chat through with you, and if there are any questions that I can address immediately. I'm going to just be on for another 8 or so minutes, and then we're going to finish off. The question is, hi, Akin. You're long cold and looking for a buy. You want to buy cold. Okay, mate. I don't know how cold. I don't know what the price of cold is at the moment. If you want to buy a cold, in other words, short natural gas, you can do that. I mean, natural gas may move down. I'm not sure. I don't know if it's actually got enough impetus to move down and break the $3 level and the support structure. And I don't think there's enough impetus really for it to drive up into much higher levels. But I certainly wouldn't be eager to short it. My idea on natural gas generally is that we'll be trading somewhere between $3 and $5 most of the time for the next year or two, maybe. And that would mean we might get spikes down to like 260, 70 or 80 or 90, more like 70, 80 or 90, more like 80, 280, something like that. And we might get spikes above $5 to $5.50 or $6, something like that. But all of that would require extreme weather or geopolitical changes. And we don't have any of that. So I don't think we're going to drive down through 3, and I don't think we're going to drive up through 3. I think we're kind of stuck for a while until we see some weather pattern changes, and until we find out this weekend, I think, what's going to happen with the Iranian situation, which is incredibly troubling. Good day, Martin. Annie's, nice to see you. I'm glad you can hear me clearly, Martin. That's wonderful. Good day, Emily, again. Is silver climbing again? Yeah, so we talked about silver, short target USD 55. Yeah, it could still happen, Martin. I think I went through silver before you posted that up, so I'm sure I covered your question. Good, Zed Pepe. Nice to see you, Cleopas, and Bishesh, the gas giant, and Emily, and Omkar. Always lovely to see you, Omkar, and Patel. Which chart to follow for natural gas? Omkar, depends what you're trading. Follow the chart that you're trading, Omkar. I trade the futures mainly, so I follow the natural gas front month futures. That's what I trade. But you might trade something else. You might trade the ETF, or you might trade a continuous contract, or you might trade cold or boil or something like that. Whatever you're trading, I don't know. And all the brokers are different as well. So you need to trade the chart that you're, the price that you're trading. But it's always good to look at the natural gas futures front month price, because that's really what the price is for our purposes. Isn't there a chance to eat the blob beyond 2240? What is that? Oh, what blob are we talking about there? 2240, Daniel. Just remind me, mate. Gold and the Dixie. Yeah, look, the Dixie's been doing its own thing, MT. So we've been seeing the Dixie moving up, moving down, stocks up, moving up and down along or against the direction of the dollar. And we've also seen gold and silver and other metals moving up or down with or against the flow of the dollar too. NASDAQ. Okay, what is the question? Let me come back to that. Okay, that's the question. Here we go. Daniel, the question is, isn't there a chance to reach the blob beyond 2240 after next weekend, when there could be trouble and war in Iran this weekend? All right. The 2240 blob, you're talking about the low blob, Daniel. War in Iran could drive this down. That's what you're saying, right? Down to here. And I think that you'll find that most of the time when wars begin, there's an immediate knee-jerk reaction, not a very violent one, not very dramatic, but a few percent one way or the other. And normally it would be possibly, I can't remember every single one of them. I've traded through a lot of wars, by the way. I've been trading for over 33 years, and there've been a lot of wars in that time. Most of the time, the markets actually like war. Certain markets, certain commodity markets, and certain stock names all love war, and they go up. It might be that there's a knee-jerk reaction to the downside, but we're not going to get down to 2240 because, I don't think anyway, because America went to war with Iran. If anything, I think it might accelerate the path upwards rather than downwards. And you should be then looking at certain names that would be benefiting heartily from any such war, as they have done already so far over the last couple of years with Israel and with Ukraine. So war means more spending, mate. There might be a knee-jerk down, but not really. And I think that's it, folks. I think I'm done for today. It's been a bit of a weird session because I had to go live to the public, and it was meant to be a private stream. So anyway, for those private members here on YouTube, I do apologize that this wasn't exclusive for you. It was meant to be, but I messed up the tech. Next week, I will not mess up the tech. I'll make sure it's right, and that this is a private members-only stream. And so if you're not a member on this YouTube channel, you can join now for a couple of bucks. Just join up. There's a button below this video that says join. I think it's $2 or $3 or $4 every month. It's very little money. In fact, I can give some away. No, I can't. I haven't got the right kit here. But and then you'll get access to all of the members-only videos yourself too. So that's how to get access to the next week's video if you're not a member. But if you are a member and you had to share today with the others, I'm sorry about that. My fault. Anyway, I hope you all have a fantastic day. I'm going to get back to the markets now. I don't like normally doing streams either when the markets are open, because and particularly when I'm away from my main office with all my screens all over the show, I can't see what's going on while I'm on stream, apart from what you can see. And so I prefer to do streams when the markets are not open, so that I don't get distracted from the markets by streaming. Okay, folks, have a good one. Speak to you soon. Thank you for attending, and I'll see you in the next video tomorrow. Hi there, I'm James. I'm the founder of ArcisFX. I'd like to personally invite you to join our 24/7 trading group. This is built for traders who want an edge. Inside, you'll get access to live calls on Forex, commodities, crypto, energies, and metals, along with exclusive daily analysis designed to unlock your trading potential. And this in both traditional and now in digital markets. I'm talking Bitcoin, crypto, altcoins, and tethered currencies. You'll gain early access to insider news, real-time updates, real-time support, and premium educational content. If you want to sharpen your skills and boost your success rate, then join me and Paul in this community. This is a fast-growing community of traders who are now writing their own success stories. So don't wait. Join up now. Your edge starts right here.